Bitcoin's historic rise above $111,800 marks more than a price milestone. It reflects a shift in global trust, institutional strategy, and regulatory acceptance. Explore what this surge really means for the future of finance. Bitcoin breaks $111,000. What this record high means for the future of money, markets, and trust. On May 22, 2025, Bitcoin, long seen as a volatile, niche asset, soared past $111,800, marking its highest valuation in history. For some, it's just another speculative spike. But for others, this moment feels historic, a symbol of a deepening global shift in how value is stored, transferred, and trusted. Behind the headlines of soaring prices is a more profound narrative. This milestone represents the convergence of institutional confidence, evolving regulations, and a growing public skepticism toward traditional finance. It's not just about Bitcoin's price, it's about what that price says about where the world is heading. A rally fueled by regulation and trust. Unlike previous bull runs driven largely by retail enthusiasm and media hype, this surge is powered by institutional alignment and regulatory clarity. The U.S. Senate's recent advancement of the Guiding and Establishing National Innovation for U.S. Stablecoins Act, Genius Act, has calmed many of the market's regulatory fears. Investors now see the U.S. moving from regulatory hostility to a position of structured integration, a signal that the digital asset class is no longer the Wild West of finance, but a maturing ecosystem worthy of serious consideration. At the same time, JPMorgan Chase CEO Jamie Dimon, once an outspoken crypto critic, publicly announced that the bank will now permit its clients to buy Bitcoin. This symbolic pivot from Wall Street's old guard adds another layer of legitimacy to an asset that was once dismissed as fringe. Crypto stocks ride the wave. The ripple effects of Bitcoin's rise are already being felt across equity markets. Shares of major crypto firms surged alongside Bitcoin. Mara Holdings gained 4.4%. Riot Platforms rose by 3.3%. Coinbase Global, the leading U.S. crypto exchange, climbed 2%. Strategy, the largest corporate holder of Bitcoin, saw a 1.6% jump. This pattern underscores a broader investor sentiment. Cryptocurrency is no longer a parallel market, it is an extension of mainstream finance. And as Bitcoin grows, so too does the infrastructure supporting it. Beyond numbers, what this means for ordinary people. While billion-dollar corporations celebrate portfolio gains, the emotional gravity of this milestone lies with individuals. To many across the globe, Bitcoin isn't a trade, it's a tool. In inflation-stricken economies, it represents stability. In nations with capital controls, it offers freedom. In areas with limited banking infrastructure, it becomes a lifeline. Bitcoin has become more than a bet on future value. It is a form of protest, a means of preservation, and for some, a last resort in broken systems. Its price spike may excite investors, but its purpose empowers the underserved. This is why the narrative around Bitcoin must evolve. It's not merely a digital asset, it's a mirror reflecting the distrust many feel toward fiat institutions and centralized power structures. Institutions are not just joining, they're transforming. The latest surge has also prompted traditional institutions to rethink their strategies. BlackRock, Fidelity, and Morgan Stanley continue to expand their crypto offerings. Coinbase's pending inclusion in the S&P 500 marks another milestone, the first major crypto-native company to join the world's most iconic index. These are not experimental moves, they are calculated, risk-managed investments by the world's most powerful financial actors. For years, they stood at the edge, skeptical. Now they're all in. And as institutions dive deeper into the crypto space, their influence could lead to broader public adoption, enhanced product offerings, and increased demand. But it also raises critical questions about decentralization and the spirit of crypto's original ethos. What could go wrong? Despite the optimism, this moment also warrants caution. Market volatility remains a constant threat. Regulatory shifts, even positive ones, carry uncertainty. A single lawsuit or legislative rollback could derail momentum. Moreover, the very institutional embrace that fuels Bitcoin's current rise also introduces new forms of risk. Centralization of Bitcoin holdings among large players could undermine the network's decentralized ethos, while growing correlations with traditional markets may reduce its appeal as a hedge. Bitcoin's future is promising, but it is not guaranteed. Conclusion: is Bitcoin a price tag or a paradigm shift? The price of Bitcoin today, $111,800, is a number. But behind that number is a statement. The world is rethinking what money is, who controls it, and who gets to decide. For some, Bitcoin is still a risky asset. For others, it's an escape hatch. For institutions, it's a new frontier. But for all of us, it poses a deeper question. As trust in traditional systems erodes, will we embrace new technologies to build a better financial future, or will we repeat old patterns in digital disguise? The answer will shape not just the next bull run but the next generation.